What's up, Squares? Harold Perkins here, and did you know that Sandra Thompson is the person who has been making home mortgages more expensive for everybody in the United States for the past year? If we don't stop her, the dream of home ownership is going to become unobtainable for most people in our country. Who is Sandra Thompson, and how does somebody that we've never heard of have the power to affect us so negatively? I mean, I've never met her, and she looks like a nice person, so why do I hate her? Well, she's the director of the Federal Finance Housing Agency, or FHFA. Maybe the FHFA is not familiar to you, but you'll recognize Fannie Mae and Freddie Mac. The FHFA regulates and sets policies for Fannie and Freddie. Fannie and Freddie are your conventional loans, which make up about 80% of all mortgages in the US. Yeah, that's right. The FHFA sets the policies for the vast majority of the mortgages made in the US, and Sandra Thompson is in charge of that right now. Well, most of the policies they set are not worth complaining about. Things like underwriting and approval guidelines are what they are. So what Fannie and Freddie do is that they're the entities that purchase your mortgage from the bank that loaned you the money.
You didn't buy it from us, you bought it from the bank.
Fannie Mae has been around since 1938, so I feel comfortable with the idea that they know which loan scenarios will perform and which ones will go to foreclosure. That's how they make their guidelines, so cool, we'll go with that. Here's the problem. The FHFA didn't exist until 2008. It was created as a reaction to the Great Recession and the housing bubble during that time. Okay, we needed that because Fannie and Freddie were going under if the government had not stepped in. Remember that conventional loans are about 80% of the mortgages that are originated in the US. If there were no Fannie or Freddie to buy these loans from banks, then home loans would not be available to most Americans. Granted, this is a very simplified explanation of what goes on, but that's basically it.
What's the problem?
So the problem is that the US government's $200 billion bailout of Fannie and Freddie back in 2008 means that they get to set the rules for how that money gets paid back. And they're getting their money back. And you're paying for it. Here's how. Depending on your loan scenario, the FHFA dictates a percentage of your loan amount that Fannie or Freddie has to pay back to the government. Yeah, that's right. It's not just a flat fee or a percentage until the $200 billion is paid back. It varies depending on your application, and sometimes the fees are massive.
It's just so massive. It's so stupid.
Well, all of these fees are passed on to you in your loan closing costs. We call these LLPAs, or loan level price adjustments. So let's look at what has changed during Sandra Thompson's reign of terror.
You were the chosen one!
She was nominated as director of the FHFA on December 17th, 2021. On January 5th, 2022, the first change she made was to increase the LLPA to 4.125% of the loan amount for people that were buying a vacation home with less than 20% down. What? Let me break that down. The average loan amount in my home state of Arizona in 2022 was $236,000. And lots of people buy vacation homes in Arizona. It's nice here. But now you're paying a fee of almost $10,000 to the government just for the privilege of buying a vacation home for yourself.
I own that. That's my vacation home.
Now, granted, a vacation home is a luxury item, and most people who are in the market to buy a second home are in a position financially to afford more expensive things. But this is not just a summer home in Martha's Vineyard kind of thing here. You know, because those people are paying cash for their summer homes anyway. What about the retired grandparents that want to have a place closer to their out-of-state grandkids? Or what about the parent that has a kid away at college and is trying to provide more affordable housing because the dorms are full? Sandra Thompson said that the reason for this increase was to ensure access to credit for first-time homebuyers and low to moderate income borrowers. What? How? Guess what, Sandy? Vacation home people and low to moderate income borrowers are not in competition with each other for the same housing. I think the first part of the press release very directly gives the actual motivation for Sandy and the FHFA. Their goal was improving their regulatory capital position over time, or simply put, More money for the government is what they wanted. Well, they got it, and it's not just the vacation home people that they're going after. On May 1st, 2023, an LLPA went into effect that charges a higher fee if you have a higher credit score. What? Yeah, that's right. If your credit score is 680 or higher, you're going to pay a higher fee for your mortgage compared to what you would have paid before. Again, the FHFA is saying here that the idea is to make housing more affordable for first-time home buyers. And to be fair to the FHFA, fees were decreased for people with lower credit scores and smaller down payment. Well, that aligns with what you would expect of a first-time home buyer. Or does it? Because according to Experian, the average FICO score in the US is 714. Millennials are the generation that are the first-time home buyers right now, and their average credit score is 687. Yeah. So the first-time homebuyer generation is considered to have a higher credit score by the FHFA. So they're paying higher fees to be a first-time homebuyer. The improvement in fees designed to encourage home ownership don't actually help because most people have a credit score higher than what they set the standard.
What's the point?
In the press release, Sandy led with enhancing their ability to improve their capital position over time. Now, why does that sound familiar? Oh yeah, because that's what she said after increasing the fees on people buying second homes. I think I see the pattern. But we're not done yet. As of the time I'm recording this, there's another LLP scheduled for release on August 1st, 2023. This one's the worst one of them all because in the end, it's going to hurt more homeowners than it's going to help.
The worst.
Starting August 1st, 2023, if your debt-to-income ratio is over 40%, then you will be charged a fee of 0.3% of your loan amount. So for the average loan, that's about $1,000. Debt-to-income ratio is the total of all of your monthly loan payments as a percentage of your gross monthly income. To put this into perspective, you can get approved for a conventional loan with a debt-to-income ratio all the way up to 50%. But now you're penalized if you're over 40%. Generally speaking, if your DTI is under 40%, then you have enough money for food, utilities, and savings. So why would we want to approve loans that have a higher DTI? Because there's qualifying DTI and then there's real life DTI.
This is real life.
Sandy is talking about qualifying DTI, but we all live in real life.
This is real life.
Here are some examples. Let's say your spouse has a job but has bad credit, so it's better to not have them on the loan. If your spouse is not on the loan, then their income does not count towards your qualifying. But your spouse's paycheck counts in real life.
This is real life.
Without counting that income for qualifying, your DTI could be over 40. $1,000, please. Or maybe you have a side hustle selling things you make on Etsy or some other online thing. If you don't report that income on your tax returns, then it doesn't count for qualifying. Then maybe your DTI is over 40. $1,000, please. Or maybe you've just recently taken a second job or a roommate. In this economy, a lot of people are doing that. But if it's recent, then that does not help you for qualifying. But in real life, that is still real money.
This is real life.
Or I can tell you from the loan originator side of things that very often your mortgage broker chooses not to use your bonuses or overtime or side hustle income from your application. This is because all of these other sources of income add paperwork, hassle, and additional hoops for you to jump through during your loan process. A good mortgage broker would remove this hassle from you so you have a better experience, and especially when it made no difference in the loan terms, but now it does.
Now matters.
And I'm certain that on August 1st, 2023, we'll start hearing stories about delayed closings or unexpected additional money due at closing because of all this. Or in the worst case scenario, there will be people at closing who find out that they don't qualify for their house because their DTI unexpectedly ended up being over 40% and they didn't have the money to pay the additional cost. Sandra Thompson and FHFA, Stop. The average American has no idea how much money you have cost them over the past 15 years.
But at what cost?
But let me show you, because these kinds of LLPAs did not exist before 2008. In 2007, the average 30-year fixed mortgage rate was 6.63%. At the same time, the yield on the 10-year Treasury bond was 5.11%. What's important here is that the difference between these two things is about 1.5%. Historically, before 2008, the difference between the mortgage rate and the yield on the 10-year T-bill was always about 1.5%. Basically, that 1.5% is the markup on what you're paying to borrow money. Let's look at it as of April 27th, 2023. The yield on the T-bill was 3.53%, but the average mortgage rate in the US was 6.45%. Yeah, that's right. There's now a 3% gap between mortgage rates and the T-bill. The markup has doubled since the FHFA came into existence. And all of that money is going to the government. Think about that. The interest rate on your mortgage should be 1.5% lower than it is right now. For the average American, that means your mortgage payment should be $325 a month lower than it is right now. Fannie and Freddie have already paid back all of the bailout money from 2008, but the LLPAs keep coming and there's no end in sight. And that's why Sandra L. Thompson is the worst. Comment below on what you think Americans should do about this. Later, nerds.